This is David Goldman, Asia Times Deputy Editor, speaking to you the evening of March 25th from New York City. U.S. markets had modest declines today after Fed Vice Chairman Richard Clarida warned that at some point in the future, the Federal Reserve might start discussing the terrible T word, that's tapering, which means fewer asset purchases by the Federal Reserve, now running at $120 billion a month, and an effective suspension of quantitative easing. And the market's very afraid of that, afraid of higher interest rates as the Treasury struggles to finance a deficit equal to 15% of GDP. Now, Clarida also said that he thought that the pop in inflation we've had recently is transitory and nothing really to worry about. And of course, the entire Federal Reserve System leadership has been saying the same thing as a mantra during the past several weeks. I don't think they're right. How do we know? Well, there's a point at which inflation becomes a self-fulfilling prophecy, and that's when everyone expects inflation and acts to protect themselves against inflation by hedging their portfolios, and that becomes a stampede. And the single biggest decision that's going to happen about inflation will happen among millions of households, and households have decided clearly what they want to do to protect themselves against inflation, and that's to buy houses at ever higher prices. Today, the Case-Shiller Index of U.S. home prices came out showing a 13.3% increase in U.S. home prices over the past year, which is almost equal to the very worst of the housing bubble of the 2000s in 2005. That's the main asset that households invest in order to protect themselves against inflation, and it has an impact. Now, if you look at the chart of the day, this is shelter inflation versus overall inflation over a very long period of time, since the early 1950s. And you can see that when we had really big spikes in inflation, like the late 1960s and the late 1970s, shelter inflation really led the way. That's because in the 1970s, people knew that the only asset class to show positive returns in a very inflationary environment was houses. Stocks showed negative returns, bonds showed negative returns, treasury bills showed negative returns. Only houses protected people against inflation. Now, this becomes something of a snowball effect. For example, lumber prices are up 90% year on year. What that means practically is that the average cost of building a house is up by nearly $40,000, and on an average house price of $408,000 in the United States, that's an increase of 10% right there. So the hedging requirements for physical assets also lead to price squeezes on the materials that go into assets, like lumber and also, for example, copper. So as inflation expectations continue to build, and households as well as corporations organize their portfolios around inflation hedges, inflation becomes a self-fulfilling prophecy. That's why I don't think that inflation is transitory. I think interest rates will be going up. Equity markets will struggle. And again, we suggest that you be afraid, very afraid. This is David Goldman speaking to you from New York on May 25th.